Hello, hello people. Welcome to UrueMarkets. Today is a special class for you because we are going to show you, teach you, explain to you how the market moves, how the market actually moves. So if you're asked or if you have a question in your mind and it goes, how does the market move? Why does price stop at a certain level and then begin to go the opposite direction? I want to understand how the market moves. Stick with us. In the next few minutes, we'll explain to you how the market actually moves. The first answer we would give to the question how the market moves is the market actually has a systematic technical order. There's an order, there's a systematic, it doesn't move at random. The market does not move and it doesn't move like dust spread out in the air. No, it follows a systematic order of movement. And if you get to see that, if you understand that, then you can make good decisions. You can make profitable decisions in the market. So let's start by showing you an example of what we have. UrueMarkets have built this structure to explain to you how the market moves. We've built this structure and we can use it to explain any market. Gold, Bitcoin, Forex, commodity, assets, anything that you would want to, stocks, anything you place our market, our strategy on, any market, any chart you place our strategy on, it just reveals to you the liquidity zones. So first of all, we have this chart for gold that we would want to use to explain to you what we call the liquidity zones. The zones that are heavy, are pregnant with liquidity, and price sees them, price goes for them. So let's take you to 2025 for gold, for example. Let's take you to 2025. Now, this chart might look crowded, yes, but what we have here are timelines, liquidity zones, and the Gantt arc. So we'll just start from 2025. Now, the UrueMarket liquidity zones are gotten from the Fibonacci ratio. And we have to tell you, the Fibonacci ratio tells us the liquidity zones. Fibonacci ratio, the Gantt arc, and our timeline. Now, all of these were carefully crafted by UrueMarket so that when we place our strategy on every chart, it just shows us where the liquidity zones are and what price will do, what price is looking at currently. And we'll go into gold, Bitcoin, and as time allows, we take you into US oil to show you what our liquidity zones are saying, first of all. And then you can also add that to the timeline, the Gantt arc, and you make good decisions in the market. First of all, 2025 opened with price around the 0.382 or 0.681 level, as you can see right here. Excuse me, no, this is not 0.8, this is 0.618 something. Now, the truth is, if you flip 0.618, it gives you 0.382. You flip 0.382, it gives you 0.618. And if you add 3.382 to 618, the figure you have is 1000. So if you have 0.618, you add that to 0.382, you have 1. And that 1 is a round number. So now look at this chart. Price opened into this level, and what happened? It went up. Why did it go up? Liquidity. Now price was trying to break the high of the previous year, which was 2024. And as you can see, the high of 2024 was around $2,790. So price was trying to break that level. So when it pulled in here, when price got in here, now take note, did I mention this was 0.618? No, this was around 0.7 to 0.8, this level. This is the black zone is 0.5, the green zone on top 0.618. This is 0.382. Now that's how we calculate it. Now the zone that is golden is around 0.9, between 0.75. Now that is where you get to close to 1, 0.715, 0.75, 0.8, 0.85, 0.9, 0.95, and then 1. Now when you get to close to the bottom of the previous candle, especially a massive candle like the yearly, and then or close to the top, that's where the liquidities are highest. And so our charts show that price blew that up and went straight for the Gann arc. As you can see, we have made a video that explains the Gann arc, and then price rested on the Gann arc within the red zone. Now the red zone is the hot zone. It's close to the high, or it's close to the previous high or previous low of the massive candle. Now our analysis is based on the highest liquidity zone, and that is the yearly. All right, so and that's why we mainly have in one chart, we can just have only the yearly Gann arc because it tells us where price is looking at. And we have also removed trend. You know, you've seen our trend before. We just want to explain to you how the market moves, liquidity zones, and the systematic technical order that it moves. We want to show you by timeline, we want to show you by liquidity zone, and we also want to show you by the Gann arc. And that is the only thing you have right here on this chart. How does the market move? Please watch. Now, when price dropped here at this point, it did not want to come into this heated environment, this golden environment, because the Gann arc prevented it. The 6 months last angle prevented it. Now, our 6 months last angle, if you check the Gann angle, the Gann fans, there is the 8.1 and there is the 1.8. All right, so we derive our angles from them. You have the 5, which is the middle. There is the 2 point, 3 point, 4.1, and all of that. So we derived all our angles from mathematically proven angles. All right. Now the Fibonacci ratio we use 0, 0.25, 0.25, 0.382, 0.5, 0.618, 0.75, and then 1. These are confirmed Fibonacci ratios that are mathematically, scientifically proven. So that's what UrueMarkets have used to build this solid strategy that we are explaining to you, that simply shows us where the price is going, where the price is looking at, where the market is going, where the highest liquidity is, and we can see it right ahead. So price broke this level, came up here. Now the timeline, we're all speaking. You notice after it crossed the timeline, it bent low, picked this liquidity, and kept going. What liquidity did it pick? The last angle. And if you notice too, horizontally and vertically, you see the last angle. You see this vertical last angle, you see this horizontal last angle, by timeline and by liquidity. Can you imagine? We show you the last angle by timeline. We show you the last angle by liquidity. And you can just imagine how price does its thing there. It came down here, crossed the quarterly last angle, hit this liquidity and couldn't do anything. It had to come down, get some energy from the last angle of the monthly, and move up and broke that liquidity zone and went up. Now, remember, we have our rule for the Gann arc. It could not just cross this Gann arc. It could not cross this zone, this liquidity zone and the Gann arc. It couldn't do that. Let me make this a little okay, right there. It couldn't cross that area. Why? The Gann arc crossed. Price could not go beyond that. The Gann arc crossed and liquidity zone. So there was no momentum to cross into this. And our trend would show exactly what is happening. This would either be the middle of the trend, the beginning of the trend, the end of the trend. Remember, we have rules for our trend. Our trend rule says at the beginning of a trend, things change. In the middle of a trend, things change. And at the end of the trend. So you watch out for this while you trade, and then you see that, you compare, you match that with the Gann arc. I can't see a Gann arc crossing here and is in the middle of the trend and still expect that, oh, price will break it. No, expect price to curve behind it. And we have a rule for when price is dropping behind an arc. Our rule says when it does that and it picks liquidity, it has to break that arc, because guess what? Price is going in this direction. Price goes in the forward direction. So unless gold had to keep dropping eternally, at some point it will meet this arc and break it. And that is what price did there. Picked liquidity from the 6-month angle within this zone and moved. Broke that Gann angle and then Gann arc. And then what did gold do? Gold just kept going up. Gold said, I have enough liquidity from here, from this zone. I have broken it. So as long as I've broken that liquidity again, remember our rule is when price is dropping within an arc and meets liquidity, as you can see, price was dropping here within this arc, but this liquidity went back up. And so UrueMarkets saw this happening, and we would greatly expect that this price will lift out of this. And this is gold. Gold always has the tendency of breaking liquidities and going higher. It went this way and kept crushing and crushing. Now, what are we trying to explain here? Our previous video showed when price is chasing the Gann arc. Now, in this video, we are making it to explain when price is feeding off liquidity. All right? When price is leaking up liquidity, and UrueMarket can see the liquidity that price is leaking up. UrueMarket can anticipate the next liquidity that price is going for. Now, this was somewhere in April of 2025 last year. Now, price just kept taking things from liquidity. Price came here, could not go higher above the high of the year. Now, the red zone is usually the toughest zone to cross. And currently, right now, today, March 27, gold is at the red zone. We'll take you there and show you what gold is struggling with. Now, another thing we'll also show you is where both US oil, Bitcoin, and gold are. And that helps to see the overall market. We'll show you. Both of them, or all three of them, including other assets, and they are all trying to cross a decisive, break through decisive liquidities. And that is the yearly Gann arc. We'll show you that's where right now gold is doing. That's what Bitcoin is struggling with right now. That's what US oil is also doing. And that is why you need to stay with UrueMarkets. You know why? We see the entire market and we share with you. We look at what price is doing technically. Now, this conversation right now is purely technical. We're looking at technical structure. We're not going to bring in the news here, because news is sentiment. News people can, raise dust with the news, and and then you run into a direction you shouldn't run into. But we are just purely showing you the technical setup, where liquidity dwells, where the liquidities abide, the timeline that controls that liquidity. Price could not rise above this zone. This should be the 0.8 There should be 0.618, 0.3, and remember, when you flip it, when you flip price, it gives you either this or that, and that's what we are aiming to explain to you here. So this should be that level 618, then you get 7, and then all of that. So 75. Okay, let me run through that again. 0.25, 0.382, 0.5, 0.618, 0.75. That beautiful fib ratio is what we use in our setup. Price dropped in here. Now this, we say the black zone 0.5. So take note, 1, 0.5, then 1. In between, 0.382, 0.618, and then 0.7, 1.75. Now you can go on and on with this fib ratio. You pick 0.25, you can get 0.1.25, 0.382, 1.382, 0.5, 1.5, and just keep building your liquidity zones, building your strategy from there. So price dropped in here, could not go beyond the half of this, and then went up. Now, again, watch all our videos so that these explanations will make sense, because they are chains of explanations. We explain to you based on the Gann arc, we explain to you based on liquidity, we explain to you based on timeline, we explain to you based on confluence. All right? So imagine having all of these technical tools, you're looking at all of them at the same time. All of them have to tell you things that will agree. Right now, the Gann arc rule that UrueMarkets has is when price is dropping in front of an arc. Right now, it was the yearly Gann arc. When price is dropping in front of an arc and finds liquidity, what will it do? It has to reverse and go back to the opposite direction. That's what happened to gold here. Price was dropping because it could not pass this red zone, this golden zone, came hit here, came back, picked liquidity, tried to go, it couldn't, then dropped here. Do you see how this price dropped? First, it came to this zone, it dropped. Next, it rose, came to this zone, it dropped. Higher highs, higher lows, lower highs. Those are the common theories you hear in trading, and that's what you see here. Lower low, lower low, high, higher high, higher. But what UrueMarkets does, we don't just take you through those expressions. We literally show you where the liquidities are, so that you see that this is where the higher low will be formed. This is where the lower low will be formed. All right? So, and then with timeline. Price, just look at this. Price dropped, as you can see, into what? Liquidity. Right there. Into liquidity. There is a strong timeline right here. This timeline that you're seeing right here, the golden one, is the yearly. If you were a driver and you are coming down the road and you see a bend, a turn, would you keep your steering straight on, or would you turn? Smart drivers, good drivers will turn. And that is what this liquidity did. Liquidity said, you know what? I will turn you around. Why? Liquidity is there. The Gann arc is there that says when you are sleeping on top of me, you're falling down from me, you get to a liquidity, you must pause there and start rising. And that's what we see happening right there. And the timeline approved it too. You see our fib ratio timeline. We flip fib ratio timeline fib ratios into timeline and stuff, and we use our last angle timeline to form this. So fib ratio held it right here for the quarter, for the monthly, for the year, for the yearly right here, last angle, and then the month, the 6 months did its work too, just right there. So you see, price as it dips into liquidity, we are seeing it. We're seeing, oh, price has dipped into liquidity. Price is slipping behind an arc. So this liquidity should push price up. Isn't that clear? You're using your eyes. We're not teaching you theory. We're simply teaching you how to use your eyes. After having set up these technical structure, then just use your eyes and go with the market. Our rule in UrueMarkets says that when price drops behind an arc, this is the arc, this is the yearly arc, and finds liquidity, it will pick that liquidity and break that arc. Isn't that what happened here? Isn't that what happened? So price broke that and kept struggling on top of this liquidity, but as we know, gold was saying, I'm not going to sink back in. This liquidity is too strong for me to break. There's nothing up here that is pushing me down. Rather, I have the momentum to go higher. And so gold broke all. You see the angle, the arc right there, it broke all of them and kept going. And this is what happened last year when gold was breaking all barriers. Gold just kept flying. Now, our trend appeared somewhere from August 7 all the way to October 21. Right up here, we show you our trend chart. Go and watch other videos. We have our trend. Our trend was there that told us gold will keep buying. And we saw it, just good. And we saw when gold was going to drop, October 21. Why? Because we saw the red zone was there, number one. The Gann arc was there, number two. So where will gold go? Nowhere. And our rule also with timeline says that price reacts shortly before our timeline. Where is the timeline in this regard? Right here. The yearly, the 6 months timeline to there. So there was massive liquidity here that couldn't let price pass. Gold had to drop. We announced these weeks before it happened. And then we also announced that by November 4, gold will start picking up buying. Why? Because we saw a trend there. A new trend started at this point, number one. We saw liquidity there, the 0.5 liquidity right here. Then we saw that because price was sliding behind this arc, and as soon as it picks this liquidity, the only direction is to go up and break this arc. Can you see that? Please just use your eyes. If this explanation makes sense to your eyes, I think it should make sense to your mind. All right? And when gold did that, it broke that arc, that yearly Gann arc, and dropped a little bit, picked up liquidity in front of it, and went up even higher. And that was how 2025 ended. UrueMarkets kept following it, explaining it as it happened. All right. Now it got here toward the end of the year, 2025, hit the 0.25 region after crossing this. This should be 0.25, between 0.1, 0.15, 0.25. Hit it right there and dropped back into the within 0.75, 0.85, 0.8, 0.85, 0.9 region, which is this liquidity. And right there you can see the last angle. The yearly last angle right there said you have broken through, you have swept all of this liquidity, it is enough. Now start going up. Price wanted to drop a little bit, but then the yearly last angle of 2026 held it and said, no, it's time to go up, and up you shall go. And so we saw gold open 2026 even more bullish. Right there, you see that? You see that move. But you know, there is a certain point where price gets to, the momentum has finished, it has to drop. Saturation point, the point where you have done enough. You've done enough. Please go down. You can't just keep boiling. Anything that goes up, the law of gravity says must come down. And so by January 29, gold dropped. Why did it drop again? Our trend ended there. I don't know if I should keep explaining this over and over again. Let us go to the trend. Trend right there. Can you see that? January 29, our trend ended. Okay, now let's go back to the liquidity zones chart. And that was why price dropped right there, as you can see. Trend ended, price has to drop. Okay, let the liquidity zones chart load, please. Okay, right there. Now imagine this. I see that trend has ended. I see that liquidity, it has peaked the 0.5 liquidity. It could not cross into the 0.618. What should happen? Price should drop. It has crossed this angle, this Gann angle right here, crossed this one. Fuel don't finish. That's how we say it in pidgin. Fuel has finished. Momentum has finished. Trend has finished. Liquidity has hit it. The Gann arc has blocked it. Gold has to drop. Gold has to drop. And so it did. And when it did, can you see it came into the red zone? Now, mark this. We'll show you this. It came back into this zone this week. Gold has actually shed off all the gains it had this first quarter of 2026. It has wiped off all the gains. How do we know? We see it right on our chart. Our chart tells us everything that happens there. So gold dropped in here, popped, hit the top of this Gann arc, and the example we love using in UrueMarkets is if you drop something on top of a ball, what do you think should happen? It pops up. Now, in other cases, it pierces that ball, as we will see, okay? But if that object is very sharp, it pierces. Considering either the height it is dropping from, it can. But generally, if something drops on a ball, it bounces. If it is lightweight, it bounces up. But if there is momentum, it can break that. So we know when there is momentum that would break, we know when there is momentum that will pop it back up, which is what we would show you. So now liquidity, it came up here, touched this liquidity. Now again, we're explaining this, how the market moves technically. The market moves technically. The market moves in a systematic order. The market moves with liquidity. Where it has picked enough liquidity, it goes away. The market is like, it comes to feed where it sees the food. And after that, it flies away. I've eaten, I've taken the food. I look for the next place where it is like birds who just fly, pick food, and go. Now look at this. Just use your eyes. Use your eyes. Price came up here, was sliding behind this arc, met this liquidity again. The market saw that this was the middle of a trend, number one. There was confluence here, number two. There was liquidity, number three. It was sliding behind an arc, number four. It picks that liquidity, it gets blocked by that confluence. The timeline says the year has had enough. It is time to turn back. And so gold turned back. And that is what we saw. When gold turned back, trend ended here. That middle of that trend ended here, and gold has to drop and drop, which is where we have found gold now. A new trend began somewhere around March 11. A new trend began. Remember, it is that trend that began that we saw the momentum in US oil. All right? So you have to make connections in different markets. It is that trend, this trend that brought down gold, is the trend that we saw the US government had carefully created the demand for US oil that spiked the price of US oil. We saw that. We've made video. We've explained to you how our trend, how our setup, our structure can cover, the US war that is happening. You can trade comfortably, US oil, anything during this period of the war. Why? Because UrueMarket has the strategy all mapped out. You can see now gold, because the USD, there's so much demand for USD, it's pulling down gold. It's pulling down gold. Our structure shows it came into this arc, and this time it did not pop. Remember, we used the example of a ball. If an item bounces on top of a ball, why? Because there's so much demand for USD. You need USD to buy their US oil. All attention is now focused on US and Iran. And because US is the stronger force, it is attracting demand. Now, demand means the currency is in demand. The currency is in demand means the currency is high. And so gold for the past days and yes, for the past weeks has been pushed down by the USD. That's what you have there. Now we see that it came into our arc pierce state. We have explained it weeks ago that yes, it will pierce. What is it looking for? The liquidity under that arc. And so we have it there. Now we are here today. Where are the liquidity under one? We just show you because we have all the liquidity zones all mapped out right here. You see, these are the liquidity zones. Okay, you see, it came pierce. It couldn't go any further. Gold reacted, and then it started going up. Price started going up, and that aligns with UrueMarket rules. When price is under an arc and picks liquidity, it goes, faces that arc, and breaks it. What do we see here? We posted on our Telegram channel all the developments that happen. Right here, we drew an arrow here. Check our Telegram channel, UrueMarkets. We drew an arrow here, and we said, if you were a cousin, a friend of gold, you saw that gold was here, what do you think gold would do? Gold will go up and break. Gold is trying to break out of this red zone. That's just the main thing. Gold is trying to break out of this red zone. And gold is waiting for the quarter to end. Initially, what we wanted gold to do was what we have here. Now, look at this chart. Now, this other chart includes our quarterly Gann arc, our yearly Gann arc, a 6 months Gann arc. This is the zone we were targeting for gold to come into. You know why? Because we expected that when gold comes in here, he will be hit up by the time the new quarter begins. But it seems gold is interested in buying deeper. This is the zone we are targeting to let gold rise into at the end of this quarter on March 31. If gold slides below or doesn't rise into it, then we would buy gold deeper. Then we would buy gold even deeper. So gold is interested in more liquidity to go even higher. The question again is, how does the market move? The market moves in a systematic order. It's not random. It moves in a systematic order. Where it sees liquidity, that is where it goes. Where it sees the Gann arc, that is where it goes. Tries to break it. If the Gann arc is strong enough, along with liquidity and timeline, it drops the price. But gold is always targeting to break the next level, to break the next hurdle, to overcome the next step. So what is UrueMarkets seeing at this point? Now let us take you, before we tell you what we see here, we've already said gold wants to buy deeper and then go. So this is liquidity zone, the yellow zone you're seeing there. Here is another liquidity zone that has already been taken, and we're trying to draw this liquidity zone within the arc so that you see what gold is attempting to do. Now look at this liquidity zone within this arc. What has happened here? Gold has come, taken this out, took this behind the arc, broke the arc, came in, tested this, and gold is... So at some point, gold will break out of this arc. It will not, gold will not drop into this arc eternally. No. If it does, then these two liquidity zones will block it. At some point, it will break out because price is going forward. At some point, it will break out of this arc. So the market is seeing that because gold didn't rise into the expected zone, it will still struggle a bit. We expected it because what we even foresaw was that we will have what we foresaw for gold was that we will have a hammer candle for this week. This was the candle, the type of candle that we foresaw for gold, and that is what you are currently seeing. This is the type of candle that gold will close week with this week. Gold will drop in. This was on Monday, so already that candle is forming, a hammer candle. And when a hammer candle forms, what happens usually is that the next candle that comes dips in a little bit and then pulls out. So we expect that gold will pull out of this arc by the beginning or even before this quarter ends, by Tuesday next week. And then remember, when price is sliding in front of liquidity, what happens? Gold picks liquidity if it slides in and then go higher. Gold is still very much bullish. It's looking to lick up all the liquidity here, which it has already done. And also remember, timeline. There is a timeline here, 6 months, monthly, yearly, monthly. The dashed lines are ratios. These are the last angles, and then gold will eventually go up if it struggles further. Now, what is happening in the world of Bitcoin? UrueMarkets had told you 2 weeks ago that Bitcoin will not rise above this level. Rather, Bitcoin is looking to break even downward and lick up more liquidity here. Why do we feel so? For some reasons. Let's show you the first reason in this arc. We've already mapped it out. UrueMarket does a lot of work for you. We show you freely what we have mapped out. We just let you see it and conclude. Now, why did we draw out this line? What is Bitcoin trying to do? In a nutshell, Bitcoin is trying to lick up all the gains it made for 2024 and 2025 before it goes up. That's what Bitcoin is doing. And that's the setup that we can see. We earlier explained that Bitcoin will break this arc downward. And that's what is happening. That was since we entered this trend. We knew that this trend was not going to push Bitcoin upward. It was going to drop Bitcoin lower. And so we predicted that Bitcoin is dropping. Now we're continuing our prediction that says this level will not hold. It will not hold Bitcoin. Bitcoin wants to sweep all of this. Now come here. Let's show you 2025. 2024, all the liquidity that was dumped for Bitcoin. Now let's make you see these on the daily time frame. Good. Right there. You see all of this liquidity that you find, all of this consolidation that you find here? The liquidity for them, the stops, when this buying was done, the stops were under here. And that is where you find the liquidity. If I let you see our chart, as you will soon do, you see that there is either the 0.5 level right here under it or a golden level. Now this was the middle of 2024. This was September and August. Where did 2024 start? 2024 started somewhere here. So this was the middle. It ended somewhere here. So this was the middle. The 0.5 level is what price is targeting to sweep of 2024. Okay, and that's what is happening here. It's already dipping. It's telling you I am going down. That's what Bitcoin is doing. So let's go in and see further. So UrueMarkets have mapped out these lines. Now let's explain these lines for you. On this day in 2024, April 29, our trend said that the trend has ended. A new trend began. Price dipped in, peaked liquidity. Price dipped in. Look at that very well. Peaked liquidity. What was happening to price? It was sliding in front of a yearly arc. Our rule is when price is sliding in front of an arc, it peaks liquidity, it goes up. So price didn't drop in, and it was the middle of this white trend, as you can see. The middle of it, price changed direction and went up. So a lot of liquidity was dumped here. It took a lot of money to turn the steering. And if you have seen trailer drivers, especially trailer drivers, the old trailers, that the steering was not power steering. The steering was, it took a lot of force, to turn the steering. It took a lot of money to turn this price that was heavily bearish around. And that's what you see there. Liquidity was dumped there. UrueMarkets have put that line there for you to see. That line, this one, I'm changing into black right now and then changing back into, okay, let me use black. Let me leave all of them in black. Now again, price came, went around this arc. Now this is where price currently is at Bitcoin. Couldn't break through this arc. A new trend ended, an old trend ended, a new one began, but it didn't lift price up to break this arc. It dropped. When it dropped behind, constantly remember the UrueMarkets rule. When price is sliding behind an arc and meets liquidity, it has to go. So that was liquidity here. Price peaked, it broke this arc. All right. So it took a lot of money too at this point to turn price around. Liquidity was dumped there. Now, price broke this arc, but there was still no momentum. This trend ended. If this trend had continued, price would have continued. But UrueMarkets sees where the trends begin and sees where the trends end. So a new trend started. That trend was bearish, brought price down. Remember again our rule: when price is sliding in front of an arc, meets liquidity, it will pick it and go up. So liquidity was here, price picked it and changed direction. A lot of money was dumped here to turn the steering to make it go up. All right, we're getting somewhere with you. So price lifted itself, trend ended, dropped, came back, and now it rested on this previous liquidity and went up, broke this arc, couldn't sustain the momentum, dropped again. It took another you need to know how much the big banks, the centrals, the big institutions drop to turn price around. And if you happen to go in with your small amount of money as a trader, not an institutional trader, as a day trader, a swing trader, with your amount of money, then, and you go in the direction the big boys are going, then you make some benefits for yourself. You make some profit for the day. So let's change this. So you can see all of these are where liquidity were dumped. Now we are in 2026. Price has come down there. Bitcoin will not see those liquidity and just turn here. Even the technical setup does not support it. We told you earlier that this tube, this arc, is too slippery. Bitcoin is too weak to climb on top of this into this arc and go up, even in this trend, Bitcoin is too weak. So it has to go down. What is the greatest force that is pushing Bitcoin right now? Is it a bearish force or is it a bullish force? It is a bearish force. And that bearish force was since 20 was all right, people, welcome back. I'm so sorry for the break. Unfortunately, again, we had audio issues after we finished a 1 hour recording. We noticed that halfway into the video we lost audio, and while reviewing it, we noticed that, and we decided to do this recording again for you to see. And price have moved away from where we were when we started. And this is where we were at this point when we explained why Bitcoin crashed in October, beginning October 6th. The trend had ended here, and then price kept coming down, and it has gotten here. It's very painful when you have to do another retake after you just finished one. You felt it was good, but hey, sometimes disappointing situations present even good opportunities. And what is that opportunity that we can see? We can see gold happening exactly as we just told you it will, right there. So this video was to tell you how does the market move, how the market moves. But right in the middle of it, we're telling you this is how the market is moving. The first part of this video was to tell you how the market moves. The second half is the market is moving exactly as we just finished predicting. So we can say that the loss of audio may have presented a beautiful opportunity for us to do a retake shortly. And you see how gold is going the way we just said it will. All right. Very interesting. Now look at that standing ovation in this 2 hours time frame that gold is giving. Look at this. Just look at what gold is doing right here. Look at this. Look at this standing. Just look at the way gold is standing right. He's saluting. And gold buyers are rejoicing because gold is doing something good for them. And that is according to the way UrueMarkets saw it will. Interestingly, gold is telling us, you know what, master, or masters, I want to do as you said. And because we had earlier said that gold should find a way into this arena, all right? Find your way in here. And then from here, as the quarter opens, the new quarter begins, you should find something. And if you look at the liquidity zones chart, gold is also saying, you know what, I have stayed in this zone for too long, in this red zone. Do you think that with this kind of standing ovation that gold has given, lifted itself above this yearly Gann arc, that gold will retreat? No, it shouldn't. It should not. Gold has suffered a lot in the hand of the USD. Gold is saying, I am gold. I need to start doing what I do best, which is buy. All right, so there you are. You know what to do for gold. Now, what about BTC? BTC also gave us an opportunity to see what we predicted. It is slicing through this Gann arc. Okay, so again, our bias is bearish for BTC. Our bias says that BTC still have some leaking to do here. So break this fall, leak price. So our bias is bearish for BTC, and we can already see that playing out, as you can see. So again, our discussion today has been on showing you the technical structure of things, how the market moves. The market is not random. Nothing is moving randomly, which is what scares a lot of people about the market. They feel that It is too volatile. And that's what I've heard a lot of times about gold. But hey, if you knew, as we do, that gold was going to buy and you buy, wouldn't you actually love the volatility? You would be like, I love the market because it's volatile. Because when it is volatile, it brings you gladness. It brings you good things. It brings you reward. Okay? And the basic thing about the market is knowledge. Having knowledge about how the market works, having knowledge about liquidity zones, having knowledge about that art, having knowledge about timeline, and then you can literally predict, speak the word, and the market will obey. Speak the word, and the market will definitely listen to you and say, yes, master, I'll go as you have asked. The good thing we should know is there are times the market wants to rest, consolidation periods. The market actually consolidates more than it, moves. Yeah. Those periods, it's moving through technical structure. Look at this now. The market dropped in here, peak liquidity. It took some time, rose up, dropped into these liquidity zone, the golden zone, and then moved up again, which we mentioned as the other part of the video showed. We said buy from here. This is the last angle. It's coming from here. It's going up. It came back, licked liquidity from here, went up. Just that. So it is knowledge that helps you conquer the market. And that knowledge, UrueMarkets is giving it out. And watch our video, subscribe to our YouTube channel and enjoy what we churn out here each week. We try to produce as many videos as possible each week. We analyze the market, we share videos on our analysis, we share videos on our reviews, we share videos in explaining the structure of the market, like this one. This was supposed to be a video on how the market moves, but that's not how you explain the market one way without going the other way, which is you explain how the market moves, you go into analysis, prediction, you tell, okay, based on this and that, because it's default. It comes defaultly. Like you're looking at it and you're saying how it is, and the market will definitely obey. So follow this Telegram's channel. In this channel, we do not only say buy and sell, we go into some explanations. Our technical analysis actually help us to be able to tell what kind of news is coming. Look at this news. Before the news came out, our technical analysis said that we are going to see gold bounce off. Look at it, right? We said the market expects the incoming initial. This news was released 1:30 p.m. We said this before 1:30. Our UrueMarkets expects the incoming initial jobless claims news from the US to show some weakness. We expect a higher number of people have filed jobless claims. This should cause gold to pick the liquidity at 4310 zone and then go bullish going into tomorrow. This was yesterday. Going into tomorrow, which is today. Are you not seeing that happening right here? Did we not say that it should pick the liquidity? We actually expected that it would drop into this zone, but it came in here a little shy of this and then went up. Bullish, as we said. It will. This was before the news came out. And our technical analysis indicate that there is a lot of support below, which would not allow gold to drop down further. That was what we said yesterday. Look at this. This zone will not allow gold to drop down further. And you're seeing it happening. This is prophetic. It's like a prophecy. Okay, now let's continue. We are just being silly. Good. Then, when the news came out, we said, good. The news has just come out, and it is just as we said. Initial jobless claims shows that more people said they are jobless, right there. It was 205,000 before. It became 210. Look at that. Look at that. That is it. Okay. So with our technical analysis, we can actually predict the kind of news that is coming out. We can do that. So wait for gold to finish its bearish moves. The bullish move will happen later today or early tomorrow, as we explained above. People, bullish move finished yesterday. Look at that. And we said it would begin part of Thursday yesterday into Friday, which is today, as you can see right there. So join this Telegram channel because we explain the technicals. We tell you what news is coming out, and Bitcoin is doing as we said. Bitcoin has even gone further down this today, you know, just as we said it will. This was the buy that we expected for gold. All right, so, and it is happening exactly. Just go through this channel, look at the trail. Yesterday we said this about gold. We quoted what we said yesterday, and it is happening exactly as we said. It did not drop into our liquidity zone, but it went up, and it is still going up. Please join that Telegram channel. Look for hashtag UrueMarkets, URUE Markets. Okay, just follow us. Reach out to us on our Telegram channel and comment on our videos on YouTube. And if you need us to answer any questions, consult with you, we are very willing to do just that. That is what UrueMarkets is here to do, to help you make profit, to help you trade profitably in the market. Look at gold. Gold is doing what we expect it to do. It needs to go bullish right there. Okay, so what more do we have to explain? This is how the market moves. We started this video by how the market moves, but your eyes are seeing the market moving right there, as you can see. So please, let me see, is there more that we need to explain here about this? Okay, we showed you how, yeah, this is where we showed you what is happening right now. And this is further evidence that the market is actually moving in very organized, well-coordinated technical structure, very systematic technical order. That is how the market is moving. Look at gold and look at Bitcoin. Each of them right now are the same order. Gold is trying to lift itself out of the yearly guard up. Bitcoin is trying to break that yearly guard up. It's from what we analyze, liquidity is right down below. It needs to break this again. Can you see that? Now, if I flip this scale, this, yes, and invert it, doesn't this look exactly alike? Now, Bitcoin is bearish, but I flipped it to look like gold's chart. And our rule in the market says when price is what? Dangling behind an arc, what does it do? It picks liquidity, which in this case, liquidity was here, pick liquidity and faces that arc and will do what? Break it. Now, if we saw this in a bullish momentum for Bitcoin, we're definitely going for a buy. So, oh, Bitcoin is rising. But remember, I flipped the chart. So if you now invert that chart, bring it back, that chart, the scale, and bring it back, what do you think is happening? It is going down. I mean, this is how our analysis plays out, and we're showing you just as clearly as it is. Now, liquidity zone. Liquidity zone. I love liquidity zone. Liquidity zone is where you see everyone gathered. It's like people gathered at a motor park, people gathering in front of a shop, people, where you see people gather, something will happen, or something had happened, or something is about to happen right there. You go to a park and you see a lot of people gathered in one place, and okay, the car or the bus is coming there to pick them. So where we see a lot of liquidity gathered, in this case, we see it here, gathered here. See that price should slice through this and pick this liquidity and go. We see also the last angle. This is the yearly, this is the 6 month in between the liquidity zone of the 0.5 feed ratio. Price is also same. This price we're seeing, this price we're seeing right here. His eyes, you see this, right? His eyes is also seeing that there is food below. So why don't I go and take the food before I go up? That's the energy, that's the fuel I need for this upward momentum. But for gold here, gold saw its own food. Okay, right there. I hope you can still see it clearly. Gold, all the way from here, saw its food right here and picked up. Now, remember I said I was going to show you something. I mentioned earlier that all the gains of gold has been wiped out. This for the quarter, all the gains. Can you see where gold started? Right here. Gold started there this year. Can you see how far it dropped in? This is where it started. Let me use this. This is where it started. Okay, now just pull this here. This is where it crossed. If you see this happen in the market, you just know that it has wiped off all the gains for the quarter right here. This was January 2nd. It began its ascent, went up and then dropped. That drop brought it all the way back and even below it, pick that liquidity. When you see this happen, it has swept all the gains. And that is what we expect Bitcoin is trying to do. Now, Bitcoin isn't doing it for the quarter because it is too weak. It needs a lot of momentum and it needs to gain it from the year. It needs to gain it from the yearly. That's why our analysis says that what Bitcoin is interested in doing is to pick from, let me go into the daily so that the chart can shrink and you can see it very well. It sees that I do not have enough momentum here, but in 2024, we dumped liquidity here. Let me go and pick it and use it. I need that fuel. There's a lot of crude. There's a lot of crude oil. There's a lot of fuel right here. So I need it. Let me go from here, pick it. Then I can have the velocity, the speed to climb back up because right now I am too weak, which is why we told you, and it is playing out right here. As you can see, we kept announcing. We even used down cries to say that Bitcoin is descending right here. The moment, now notice this, the moment the arc turns its back on you, in this case, the yearly turned its back right here. Don't come back in here. Well, I wouldn't let you. It struggled here. This one said you have to go down even further, and you saw liquidity down here. Bitcoin is saying, people, let's dive down even more. Okay, let's go down even more to get some liquidity. Liquidity is where it all happens. Okay, so gold is still on a standing ovation saying, people, let's go up. Let's go up. Let's begin to plan our ascent into the next quarter. And that's what is happening. Right. What more do we have to explain for you? All right, let's see. Let's see what more we have to explain for you. I think we can end it here at this time. Follow us, join this channel, subscribe to this YouTube channel, turn on notification, tell your people the same good that UrueMarkets showed for you. In doing all of this, spread the word, let people know about what UrueMarkets is doing. Just come here and learn. And we hope we gave you some value for your time by watching this video. We look forward to seeing you again. We try to upload videos weekly for you to benefit from what we do. Make sure if you're willing to work with UrueMarkets, reach out to us directly through our Telegram channel. We are sure to work with you. What we aim to do is give you value for your time. You have the time to listen to our channel. We believe you will take 1 or 2 thoughts away, lessons away from what we do here. Until we see you again, please stay happy. This is UrueMarkets. Thank you very much. See you in our next video. Bye for now.